All right. Hello, everyone, and welcome back to another episode of the Market Outlook series. So, today we are going to discuss about Nifty, the sector index charts, and there's one stock of the day that I'll discuss right at the end. So, there's very interesting uh, developments on that chart. So, that is what we are going to discuss. Okay, so I see everything is set. So, let's get started with the screen share. And here's the chart of Nifty. So quickly, let's take a look at the weekly time frame and assess what's going on. So on the weekly time frame, clearly a strong underlying bull trend with ongoing intermittent correction. Since when is this bull run been going on? To make a very objective assessment, it's been going on since November 2020, right? So here we're going to draw this line. Let's change this color to red. Okay, so this is what has been happening now. Just like back in May or June 22, there was a deep correction which over here lasted. Let's take a measurement of this. Lasted roughly, I would say, from the peak price that is here all the way till here, about 18%. Okay. Similar to this correction, we have a correction ongoing right now, which has lasted around also 17 to 18%. Is it a coincidence? No. It is called trend mirror. Basically, the trend that has occurred or the type of correction that has or the price action that has occurred before will repeat again. So I'm going to repeat that. What is a trend mirror? Trend mirror is a phenomena in which the price action which has occurred in the past, like the depth of correction against a previous impulse wave, for example, that can repeat again in current price action. So right now we are seeing 17-18% correction has unfolded the same way it unfolded back in October 21 till June 2020. 22 July 22, right? All right. So what is next? Another similarity that we see between these two phenomena is the role of the 250 EMA, which is this blue line on my chart, right? So what we are seeing here is the 250 EMA lent support to Nifty back then. The 250 EMA is also lending support to Nifty right now. Okay, good. So here, just like we saw a rally correction with a rally which took resistance here at the level of 60, we might see some resistance coming up here also. But where did this price peak get forged? If you pay attention here, it created a sort of a double top, took another dip to the 250 EMA and then started to rally. So here also, if this resistance of 23,900 gets breached, another resistance will lie at 26,300 or yeah, around 26,300, the original all-time high. And then we can see another pullback. So basically for long-term investors, right, what they want to do is they always want to invest when the market is, I'm not talking about value investors who are always looking for dips. I'm talking about long-term momentum investors, right? And that is a thing, by the way. Momentum trading doesn't always have to be short-term. There are long-term momentum trading strategies as well. That is exactly what I use for my own long-term plan. Okay. So over here, for the long-term momentum strategy, we wait for the breach above a key all-time high on a weekly time frame. So here, a key, once this all-time high resistance gets breached, that is a golden opportunity for investing for long-term with a horizon of at least 2 years and for multi-bagger targets. So a lot of people come to me and ask, how do we find multi-baggers? When do we invest? Number one, multi-baggers is not a category. Multi-baggers get identified in hindsight. Number two, if you are interested in multi-bagger investments, then you need to shift your focus away from picking up the biggest losers and look for stocks which have strong momentum alongside strong fundamentals on long-term charts. So for fundamentals also, don't look for one quarterly report. Look for the trend in quarterly reports over many years. That will give you a better idea, right? So coming back, let's also draw the trend lines on this one. So we are going to draw these two peaks, and let me change the color to draw a trend line. Now let's clone it using the control key and place it there, and we can see that this correction has almost touched and bounced back from this trend line. Also, let's draw some internal trend lines. This obviously is going to be very important resistance, right? And we can see it's a pretty legitimate trend line because resistance here, congestion, resistance, resistance, support, support, right? So here we can expect resistance to come in again, and again this level coincides with the peak right here. So there is also resistance coming in from the level of 24,600 or 24,750, I would say. More like 24,750. Okay, good to know. So what we will do is I want to take this extended line tool and I want to mark this resistance zone. So 24,800, fine, I can round it up to 24,800. And let's go to text and also write here 24,800. Okay, and we'll just change this color to red. Awesome. So now we know that there is a key resistance lying ahead of us. Let's set an alert. There we go. Okay. Now, from time horizon expectations, I would expect the test of this 24,800 level pretty rapid. I wouldn't expect a lot of delay there. Let's move on to the daily time frame. Now, on the daily time frame, what is going on? Here on the daily time frame, first thing that I am noticing is a positive divergence on the daily time frame. Very good. So why positive divergence? Because if you notice the lowest point on RSI, right? The price has forged a lower point corresponding to that lowest point. So price is forming lower low, RSI is forming higher low. That is what constitutes a positive divergence. Since this positive divergence, we are very close to the resistance of 23,900, right? Now this 23,900, once it's breached with confirmation, I'm going to zoom in here. So once this 23,900 gets breached with confirmation, then we are expecting the resistance of 24,800 to get tested rapidly on the Nifty charts, right? Daily time frame is showing that since 11th November 24, there's been a negative range. So we do wish to see the RSI of the daily time frame break above the level of 60, 65 kind of, okay? And then when it comes back, when it pulls back to, maybe the 250 EMA, that is this line, that will be a very good entry opportunity, okay? So from a Fibonacci perspective, since we have a bottom and we have a potential peak, let's Alt F, okay, and then let's draw this potential peak. The 62% correction or the 50% correction exactly lies at the expected support level. So guys, you see what I'm doing here? This is why it is so important to do past price action analysis, because what they say in technical analysis, that whatever you are observing right now has occurred in the past. So what we need to do is, in the past, we need to find that segment where this part of the history has taken place already. So there is a comment from I can't pronounce the name of this, but it's an investment solution. It says that if you put the if you put the daily charts in line, there is a bearish divergence. There are no enough peaks to study a bearish divergence. What are you talking about? Because for a bearish divergence, I want to see RSI activity above the level of 60, or at least close to the level of 60. But ever since October 24, the only time the RSI has approached the level of 60 was very recently on 24th March, and there is absolutely no negative divergence there, my friend. Okay, so let's move on to the 75-minute time frame. Okay, so interesting phenomena. On the 75-minute time frame, I am seeing that the level of 30 here was breached. Okay, and the 75-minute time frame last time breached way above the level of 60, 65, going into the bull range. Okay, now, not the bull range, it initiated the penetration into the bull range, but it did not sustain because 30 was breached. When you see this extreme activity on 75-minute time frame, in the sense that RSI is breaching above the level of 60, it is also going below the level of 30, so it's giving you extremely overbought and extremely oversold readings. This typically happens when a higher time frame is experiencing a range shift, right? So in the higher time frame, like on the daily time frame, we saw positive divergence. Okay, positive divergence or negative divergence is the moment where the range in RSI shifts from bullish to bearish or bearish to bullish. But when that is happening on a certain time frame, the lower time frame acts in a very jittery manner, which means you will see lots of overbought and oversold activity back to back. Okay, so all that we are observing on the charts is giving us very good indication. Okay, someone just commented me to speak loudly, so I've just moved the mic closer. uh Jitin, I hope this sounds better to you. Right. Thank you so much for your comment. Just give me a confirmation, Jitin, that you're able to hear my voice better now. So 75-minute time frame, daily time frame, weekly time frame, all the analysis is lining up very well. We don't see contradictions between all of them. Okay. So to conclude in very few words, on Nifty, the expectation for the next few weeks is that the resistance of 23,900 is going to breach. Next resistance of 24,800, a rapid almost 1,000-point rally is going to be witnessed. Strong resistance lies there. We are expecting a pullback, and that pullback is expected to retrace this rally, which started from 21,800 and is expected to last till 24,800, to be retraced by 50%, taking us to the 250 EMA and giving us very attractive entry opportunities. So this is what my conclusion for Nifty is based on all the analysis that we've done right now. Now let's move on to the sector indices. So we're not going to spend as much time as we've spent on Nifty's analysis. We'll do a quick brush through. Okay. All right. So on CNX metal, this is the first sector that we are going to study. So metal sector is looking very bearish right now. I am not interested in um, making trades in the sector unless two things happen. Number one, the previous high gets breached, which would establish a bullish trend, right? And on the RSI, I want to see the level of 60 breached with conviction. Unless these two things happen, I am not interested in touching the metal sector. Moving on, oil and gas. Oil and gas is showing positive divergence on the daily time frame, which is very good. It is also very close to the previous high right here. It is also very close to the previous to the resistance of the 250 EMA. So as soon as oil and gas, I would say, break above these resistances, it will become attractive. So we are going to move oil and gas. I don't want to move it to bullish. I want to create a new section here and call it April 18, and I want to call it potential because there is strong potential and we are waiting for certain confirmations here. So what I will do is I'm going to take this call out note and I'm going to add my notes on the chart. So waiting for RSI overbought in daily and higher high above 10,684. uh, also the 250 EMA. Okay, that's it. Let's move on to the next stock. Uh, okay, so next is finance. So what are we looking at in finance? Finance very strong rally. We see the sector taking support at the level of 250 EMA, and we see that the finance sector has been in a strong bull run since it broke above the level of 60 on 28th of July. Now remember, the RSI that I'm showing you is a 25 period RSI, not a 14 period RSI. Okay, so uh, this, it has been bullish ever since. It continues to remain bullish. We need to draw some trend lines here to get a better sense of the trajectory. I would say this is a pretty good trend line. Over here, it breached the series of trend line to go back higher up, but didn't really sustain that move, did it? Okay, so let's see. That was the highest resistance, one level below resistance. Support, uh, not liking this trend line set very much. So let's retract and redraw the trend lines. Want to join the bottoms. Yep, and this is giving me a better sense of the trend's trajectory. So let's clone this and place this right at this peak. And this actually coincides with the previous peak, so a lot better than the previous set of trend line was doing. Here, if we draw this internally, we are getting a sense of the internal trajectory. Okay, so we are seeing that there is definitely more room left for the finance sector, but not enough to make fresh investments in. So I already have some investments in the finance sector. So I think now what I'm going to look out for will be to book profits in this sector rather than make fresh positions. So yes, it is bullish right now, but it is very close to the resistance trend line. Maybe I might make more investments in the finance sector. If I do, it'll be from a very short term perspective for smaller targets. So I am going to keep finance sector under the bullish segment because it is bullish right now. Okay, one thing that I want to mention is when we are doing analysis, technical analysis, biases tend to kick in. You will often categorize something as bullish when it is honestly sort of bullish or not very bullish or coming out of bearishness. Now, remember, something that is coming out of bearishness is not bullish. Okay, it is still bearish. So, when you're doing your analysis, stick to being very objective. So let's move on to Bank Nifty. Again, Bank Nifty very strong rally following a positive divergence on the daily time frame. We can see that the Bank Nifty is already overbought. Nifty is not overbought yet. Bank Nifty is already gone overbought. So it is kind of leading the rally over here. If we zoom out and if we draw a trend line, I think I want to connect these peaks because they look good. Let's see. Are they really as good as I think they are? Well, the trend line looks pretty legitimate, but we do see some activity below this, and this correction kind of ended abruptly here. On the upside, is there key resistance that we should look out for? I would say this trend line does look like a key resistance trend line, right? But there is definitely room upside. So I would say Bank Nifty has quite a bit of rally uh, ahead of it. So we are going to move it to the bullish sector and the bullish section. Same goes for the private bank. Very similar analysis there. So I'm not going to waste time on that again. Let's look at CNX Media. So I think CNX Media is coming out of a massive correction and it is now above the level of 40 and it has established a higher high, right? So I think CNX media sector, if you look at the 75-minute time frame, the positive range shift is even more pronounced because here it's taking support at the level of 40 and going overbought. So I think CNX Media is also a space where I'm going to be looking out for opportunities. Now let's look at FMCG. Clearly, there's been a massive shift in FMCG, and okay, it's already gone overbought. Now the thing about FMCG is that once it turns overbought, it extends the rally by 50%. So this rally that we've seen over here, right, this 12% rally, I expect this 12% rally to extend all the way up. So I expect the resistance to be in this zone, right? So I would say FMCG is also looking very bullish. So you see, as Nifty is turning bullish, the sector indices have also uniformly started giving a lot of bullish signals. If you've seen my market outlook in the past few weeks, when the bear run was, hot and heavy, that time all the sector indices were also giving us indications of weakness. So this is how the market operates, that when the broad sentiment improves, the sectors also start to give good indications. Now our job is to use tools like my RSQM model for me, or if you have other screeners then those for you, use those to identify strongest candidates in these sectors and then make your bets. Don't go about randomly picking stocks from these sectors just because I'm calling them strong. Within these sectors, you need to pick up the strongest stocks. All stocks in the bullish sector are not going to perform equally. All sectors in a bullish market are not going to perform equally. Okay, so do your due diligence. Moving on to pharma. Let's look at the pharma sector. Let's look at the pharma sector. So I would say the pharma sector is not yet bullish because no higher high established. 250 EM is struggling. Previous low breached. Sure, there is a small positive divergence on the daily, but not very convincing as such. I would say the other, like the finance sector, has much better signals right now. So that's what we are gonna go with. Let's move on to IT. Oh my God, no, absolutely not. I am not touching IT sector uh, with a long stick. No, no. Let's move on. Infra. Let's see. Okay, so infra, I had been very bearish since I would say back in August, because I could see that it was peaking out. And now, after many months, it has done some very interesting things. Number one, the 250 EMA on the infra sector chart has become bullish again. Number two, the level of 40 has been sustained, but 60 has not yet breached. And number three, higher high has been formed. So I would say the infra sector is also coming back into favor. So keep an eye out for that. I wouldn't say the infra sector is bullish. It has potential. So I'm going to move it to the potential category. The thing about sectors showing potential is that even if they may not have strong investment opportunities right now, but in the weeks to come, 2, 3, 4 weeks down the line, they will present amazing opportunities to invest in. So because when we are trading, still saying the voice is low. Sound check. I don't know if, hold on, let me see if the, oh, okay. Okay, is my sound better now? Okay, I hope my sound is better now. Disconnected my mic. I'm so sorry about that. Okay, so continuing with, so IT is a no-go. Commodity, not very interested in this sector per se. It's also not very bullish. So let's move on. Consumption, higher high not established. RSI still in bear range, not interested. PSE, I know a lot of people have a lot of fun stuck in PSE stocks because they bought out of fear of missing out right at the end of the rally when I kept saying there's a negative divergence, stop buying PSE stocks. But who listens to me, right? Okay, so PSE is not outright bullish. It is not even in the potential category right now, because what it is, The rally that it is showing right now is not the beginning of a new rally, in my opinion. It looks more like a pullback in a larger correction. So I am going to continue to steer clear of the PSE sector for now. But there are some individual stocks in the PSE sector which are showing pretty good potential, awaiting confirmation. So PSE sector does need confirmation, needs to establish higher high, needs to go overbought, needs to breach above the 250 EMA. If all of these things happen, then there is potential. In my last video, I discussed the stock of Masdaq. Sorry, last to last video, last stock was Solar Industries. So Masdaq, I discussed that there is strong potential, but I also discussed few confirmation criteria like this one. So if you're interested in watching that video also, just make sure you go to my YouTube channel and see under the live category. That's where you're gonna find the videos. Okay. So moving on, PSU Bank. Did we discuss PSU Bank? Okay, PSU Bank. See, okay, PSU Bank and private bank sector usually not necessarily have the same predictions on the chart, right? So we've seen a massive strong rally on Bank Nifty in the private bank sector, but not on PSU Bank. But is PSU Bank looking positive now? We are seeing a positive divergence had forged right close to the bottom, and it has started to rally. 250 EMA has been breached, higher high has been established. So I think PSU Bank is ready to offer to us what the private bank and the finance sector has already offered. Very bullish. So we've moved it up in the category. We've discussed consumption, PSE, we discussed energy, right? So on energy also, strong positive divergence here. I wouldn't call it strong, I would call it positive divergence, but I do need it to sustain above 35,100, I would say, for it to really pique my interest, right? I need it to sustain above this previous high, right? Once it does that, then I will come back to assess it. I would say it has potential. So you see, oil and gas and energy are kind of showing the similar development. Okay. Next is auto. All right, we look at the auto sector and there was a negative divergence. Oh, it is looking pretty bearish to me. So let's move on. Realty, there is a strong positive divergence. Now remember, realty and infra are often very hand in hand, just like energy and oil and gas sector. Now, here we can see that a higher high needs to be established, but RSI is already showing positive divergence. Also, 250 EMA needs to be established. So, I wouldn't say it is bullish right away, but it does have potential. And over the next quarter, I'm going to look at keep an eye on the realty sector for potential strong turnarounds. Okay. Let's move on. Healthcare and pharma are in the same line, so I don't want to discuss that. So we are done with the sector indices. Let's quickly look at my intersector index chart. This is going to give us a sense of how the sectors have done relative to each other. And I can see there was a massive dent on the 7th of April. So we are going to make that as the base and look at the comparative analysis. So right now the broad market is doing way better. So remember, when a major turnaround comes in the price, right, the broad market leads the rally. So we are seeing CNX 500 or actually the Nifty 50. This is Nifty, right? Yeah, so the Nifty 50 is actually leading the rally. We don't get to see this phenomena very often because bottom reversals are rare, right? So Nifty 50 is leading the rally. Close behind is the private bank and consumer durable sector, finance sector, banking sector. All the sectors we've seen a very strong rally since April 5th, right? Realty, infra, metal, auto, I mean, the order is very similar to the one that we've created over here, right? So not much to discuss in this. So let's go back to our layout and discuss chart of the day, which is RBL Bank. Why RBL Bank? So let's remove the drawings and let's redo them for you. So here there is a clear trend line resistance. Let's use this, clone it, and create our internal trend lines here and here. And let's zoom out. Let's go to the weekly time frame. And what am I seeing here? I am looking at a major rally which unfolded from here all the way to here, and this major rally has been corrected by 50%, and now the chart is forming what we love to call a rounding bottom. What is a rounding bottom? After strong correction, the price action enters into a congestion zone and then gives a upward breakout. So that is what we are seeing here. Corresponding to this congestion and breakout, we are seeing a positive divergence on our weekly time frame, which is indicating there is strong potential for long term investment or long side investment building up on this chart of RBL Bank. Okay, so far we have positive indications coming in. Let's go one time frame lower. On one time frame lower, also I see the RSI bottomed out here, but the price bottomed out here, pushing the RSI into positive range. Okay, so we see the RSI has supported the level of 40 against a lower or similar low on the price. Okay, so in addition to that, I am also noticing that a higher high has been established because RBL Bank has sustained a breakout above this level. Now, why is my arrow button on the left? Okay, so this is weird. Okay, that was annoying. Let's change. So 20, it's changed the source to close when I want the source to be volume and I want the style. I don't want MACD, I don't want signals, I only want my histograms. Okay, that looks fine. What about the volume activity? I see the volume activity. Let's zoom in, zoom, 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 zoom. So the volume activity seemed to be picking up slightly on the way up, but it hasn't picked up that well or that strongly right now. Okay, fine. I see you. Let's reset the view. Let's zoom out. So daily time frame is telling us positive divergence, positive range. Yes, we do want to see more positive volume activity. The good thing that we do notice is the volume activity on the downside has definitely ceased. So over here, you see when this correction unfolded, the volume shot up strongly, indicating that more correction was to be expected. But once the bottom has been forged, we are seeing the volume activity on price declines is absolutely drying up, but the volume activity on price rallies is pretty strong. This is giving us an indication of a buildup of positive momentum in the price. Now, 75-minute time frame is looking absolutely lovely for RBL. Why do I say that? So since this point, since 4th September 24, it turned bearish. It gave a massive positive divergence end of December, and it turned bullish but didn't sustain, turned bearish again, bearish, 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 and it has turned strongly bullish since 19th March 24. Since the 19th March, it has turned bullish. It has given a breakout and it has again given a breakout. So I think RBL Bank, all in all, is showing very strong signals, evidences of a potential new bull run about to unfold. What would my trade setup look like? Now, since I want to trade in this stock for long term, so remember I spoke about long term momentum investing. So I think RBL Bank is becoming a very good candidate for that. Here, I would keep my stop loss below 145, I think, for now. And what would my target be? So since this was the previous peak, right? And this was a strong bull run that got corrected. I would expect this previous peak to get breached, right? We would expect a higher high. So this is an internal trend line level. And even though the original target should be close to 520, I want to be conservative, not go that high. But I do think that there is potential for the stock to go as high as 400 because of the trend line resistance, because of the resistance coming in from these previous peaks, right? Remember, previous historical price peaks can also exert a lot of supply pressure on the charts. So from a price of 183 currently, right, we are expecting strong confirmations to come here. We are expecting a stop loss of around 20%. So we are taking a 20% risk on the capital for a potential 118% rally in the prices. So the public sector bank is actually starting to show up multiple candidates where long-term investments for potential multi-bagger target levels is being is starting to show up. So in my long-term plan, I have already given a recommendation in one more PSU bank, which I'm obviously not going to name here. But if you want to know the name and the trade setup, the target and the stop loss for that, and if you also want to enter RBL Bank when it is most opportune, because I am going to start tracking RBL Bank, and when it looks most attractive, offers the maximum risk reward ratio, that is when I'm going to issue it for my members of the Trade Together program, or the long term investment plan, actually, not the Trade Together program. One last caveat: there is a reversal 2025 coupon which offers you 25% discount on my prices going on right now. This discount will only be valid until Nifty establishes a higher high, which means once Nifty breaks above the level of 23,900 over here, this discount is going to cease. Right now Nifty is at 23,851. So you essentially only have this weekend to sign up. If you want to sign up for the services on that I'm talking about at a 25% steep discount of 25%, because if you know me, I don't give discounts. It's only because the market has been giving an extended correction. Everybody's lost a lot of money, and I want people to make the right decisions, and the right thing to do is to buy when the market is coming out of correction. But people usually don't do that because they're so scarred by this correction that they will wait for the Nifty to establish or the market to establish strong rally, then end up buying close to high. I don't want you to do that. Okay, I want you to participate, get over your fear, and start buying stocks now when the new rally gets established. So I'm offering a 25% discount. If you're interested in this offer, then just go to my Telegram channel, visit the links. All the messages are already there on the thing on the channel. I'll just forward it once again to bring it to the top for you to make it easy for you to find it. So just go to my Telegram channel, find the links, explore the website, look at the details, make an informed decision. And let me also share with you the link to my Telegram channel. So it is simply Trade with Kavita. I am sharing in the comments right now the link that you can simply click and open Telegram, join. I'm trying to make things as easy for you as I can. It's really, the actionable is on you. Okay, so this is it for today. I have taken note of the stock requests in the comments. I will not be going over the analysis right now, but I will assess these stocks after the live session. And if I see strong potential in them, then they will become part of my 100 stock analysis series. All right. So, with this, we come to the end of today's live session. Thank you so much for joining in. I will see you again on Monday with a new stock. Thank you for joining. I will see you on Monday.